to Byte-Sized Tech, where we blend those casual conversations you love with some insightful discussions on the latest in, well, everything tech and gadgets.
And it's a wild world out there in tech land right now. Feels like every time you turn around, there's a new headline about tariffs and trade wars, and honestly, enough to make your head spin.
Yeah, no kidding. It's kind of like, will my next phone upgrade cost me an arm and a leg? Or will that cool new startup I've got my eye on ever actually go public?
All very valid questions, and ones we're going to unpack today in our deep dive. We're going to try and cut through all the noise and figure out what these big shifts really mean for you, the listener.
Right on. So first up, let's talk iPhones. I mean, who isn't at least a little curious about whether the next iPhone's going to hit our wallets harder than usual, especially with all this tariff talk?
Absolutely. And it's actually pretty interesting because Apple's been pretty strategic with their pricing in the U.S., at least up until now. They haven't typically just, slapped a higher price tag on each new model.
It's more like they phase out the older, cheaper ones, right? So you're kind of nudged towards the pricier options.
Exactly. It's subtle, but it's been their main playbook in the U.S. Now, globally, it's a different story. We've seen price hikes in a bunch of other markets like the UK after Brexit, in parts of the EU, even a pretty significant bump in Japan back in 2022.
Oh, yeah, I remember hearing about that. And Canada and Australia haven't been immune either, have they? It's like everywhere but the U.S. has seen some price adjustments over the past few years.
Yeah, the U.S. market has been strangely stagnant, you could say. But with these tariffs and their suppliers potentially having to adjust, that could all change.
So it sounds like we might not be dodging that price hike bullet forever.
That's the general consensus among analysts right now. Now, Apple's obviously going to try and mitigate things as much as they can.
Yeah.
They'll likely push their suppliers on costs, maybe even absorb some of the hit themselves.
And I imagine they'll be fiddling with that massive, crazy, complicated supply chain of theirs, right? Of trying to find ways to optimize things.
Oh, for sure. But even with all that maneuvering, the feeling is that some sort of price adjustment is probably on the horizon, maybe even with the iPhone 17 launch later this year.
Why then? What makes that a likely time for a price bump?
Well, think about it. When they launch a new model, especially one with some big hardware upgrades, it's easier to adjust the price. You're not directly comparing it to the previous year's model at the exact same spec.
Smart. So even if prices do go up, it's not like Apple's leaving us high and dry, right? They've still got those trade-in programs, which can knock a decent chunk off the price.
For sure, those trade-in programs can definitely help, especially if you've got a fairly recent phone. And let's not forget about the carrier installment plans that are pretty much everywhere these days.
Yeah, those monthly payment plans make it feel a little less painful, even if the overall price is higher.
Exactly. So while no one loves seeing prices increase, at least there are some options to make that new iPhone a bit more palatable, I guess you could say.
Okay, so let's address the elephant in the room, or maybe the elephant in this case. I saw some, shall we say, creative headlines floating around. One claimed a made-in-the-USA iPhone would cost like $30,000. Another one threw out a number closer to $3,500. What's the reality check on those figures?
Oh, those are way off base. It's clickbait, plain and simple. Apple has zero intention of shifting all their iPhone production to the U.S. I mean, logistically speaking, it'd be a nightmare, not to mention the cost implications.
So what are they doing to deal with these tariff pressures?
Well, their strategy is more about diversifying, finding those safe havens for manufacturing where they're less exposed to tariffs.
Makes sense. So like what? Are they going to start building iPhones in my backyard?
Probably not. But seriously, they're ramping up production in places like India, which has actually lowered its tariffs compared to China. Vietnam's another hot spot for Apple's manufacturing expansion.
So no giant iPhone factory popping up in, say, the Midwest anytime soon. I seem to recall some Wall Street analyst making a joke about quitting his job to go build iPhones.
Yeah, that was a funny one. But no, Apple's not about to become an American manufacturing giant overnight. What they are doing is strategically shifting their supply chain, diversifying it to become more resilient.
So more production in India, Vietnam, maybe some exploration in South America, parts of Europe, and still a significant presence in China. It's about spreading the risk, right?
Absolutely. And we've even seen reports of Apple strategically stuffing the U.S. channel with inventory, trying to get ahead of any potential tariff hikes.
Clever move. Now, what about Tim Cook? He always seems to have a pretty good pulse on the political landscape. Is he doing some behind-the-scenes maneuvering, trying to get some of these tariffs waived for Apple?
I'm sure he's working the phones like crazy. But unfortunately, this administration seems pretty set on these tariffs. It's not like the good old days where a well-placed call or donation could get you a carve-out.
So the takeaway here for anyone eyeing that next iPhone is that the price tag you see isn't just about what Apple decides. It's tied to these much bigger global economic forces that are swirling around.
Exactly. Understanding those international dynamics gives you a much clearer perspective on why the cost of those gadgets we love can jump around, even in a market like the US that's been relatively stable up to now.
Okay, so let's shift gears a bit. Let's talk about something else that feels like it's hit a bit of a snag. The IPO market.
Ah, yes. The great IPO slowdown. It's definitely been interesting to watch. There was all this buzz earlier in the year about 2025 being a banner year for tech IPOs, but that excitement seems to have, well, evaporated a bit, hasn't it?
Yeah, what happened? Was it all just hype?
Well, not necessarily.
Okay.
But a big factor is definitely this overall market uncertainty and instability we're seeing right now. I mean, look at the VIX, which basically tells us how jittery the market is that's been hovering near 50 at times.
And that's high, right? That's like the market saying, whoa, hold your horses. Things are a bit shaky right now.
Yeah. Exactly. And in that kind of environment, both the companies wanting to go public and the investors who normally be snapping up those shares get a bit, well, hesitant. No one wants to make a big move when they don't know which way the market's going to swing next.
So it's not just about tariffs then. There are other things feeding this uncertainty.
Right. Like inflation that's making everyone nervous.
Yeah.
Will people still be spending as freely on, all the cool stuff these tech companies are making if prices keep going up? It's a big unknown.
So what does this mean for all those companies that were supposedly getting ready to go public, the ones we've been hearing about forever, like StubHub, Klarna, Chime? Are their IPO dreams on hold now?
Quite a few of them have definitely hit the pause button.
Yeah.
And the ones that were still kind of on the fence, like Shane, Bolt, Discord, they're likely watching all this unfold very carefully.
So basically, they're waiting for things to calm down a bit before taking that big leap, right?
Exactly. No one wants to launch an IPO in the middle of a market roller coaster.
Okay, but for the folks listening who maybe work at one of these companies or have some investments tied up in them, what does this IPO delay actually mean for them?
The biggest impact is on their liquidity. Going public is a way for employees and early investors to cash out some of their holdings, to see a return on their hard work or their investment. But with the IPO market being so quiet since 2021, well, they're stuck waiting.
So they're kind of in limbo, huh?
In a way, yes. Now, we are seeing a rise in the secondary market, which is where people can buy and sell shares of privately held companies.
So it's like a backdoor way to get some liquidity, even without an IPO.
You could say that, but it's not quite the same as a full-blown IPO. The valuations are often lower, and it's just not as exciting for investors.
So even with these secondary markets, most folks are still hoping for that eventual IPO payday, right?
Definitely. That's where the big money usually is. And it's important to remember, this IPO slowdown isn't just a U.S. thing. It's happening all over the world.
It's like everyone's hitting the brakes at the same time. Now, there was one recent IPO that seemed to do pretty well, despite all the market craziness. CoreWeave. What's the story there? Was that just a fluke?
CoreWeave was definitely an interesting case. They had a few unique things going for them, but yeah, their IPO did surprisingly well. I think it shows that while there's a general pause, there are still opportunities for the right companies, especially those with a strong growth story or in a particularly hot sector.
So the takeaway on the IPO front is that these market swings and all this uncertainty can really throw a wrench in things, even for those privately held tech companies. It's not just about how well they're doing, it's about the bigger picture.
I couldn't have said it better myself. It's a great example of how everything in the financial world is interconnected.
Okay, so let's bring it all together. What's the common thread we're seeing with both the potential iPhone price hikes and this IPO slowdown?
The big, flashing neon sign is uncertainty, my friend. And a lot of that uncertainty right now is coming from, you guessed it, tariffs.
Tariffs. Back to those pesky tariffs.
They're like the unwelcome guest that just won't leave. And all this uncertainty is making the market do this weird whipsawing thing, up one day, down the next. It makes everyone nervous.
We saw that with Apple's stock price recently, right? Had a pretty dramatic drop. Its biggest in like 2 decades or something.
Yeah, that was a wild ride. And it's not just Apple. I mean, think about all the big tech companies. Meta, Google, Amazon, Microsoft, the whole gang. They all make a huge chunk of their money outside the U.S.
So these tariffs hit them where it hurts, right? Their bottom line.
Exactly. And that's why analysts are starting to get a little antsy. We even saw one cut their price target for Apple, specifically because of these tariff risks. They're basically saying, hey, we don't know how this is going to play out, so we're being cautious.
But amidst all this gloom and doom, there are still some optimistic voices out there, right? I've heard some analysts say these tech giants are still solid long-term investments.
Yeah, there are definitely some folks who are still bullish, especially on companies like Apple. They point to things like their push into AI, their growing services business, and the fact that they're sitting on a mountain of cash.
So it's not all doom and gloom. There's still potential for growth.
For sure. It's just a bit more complicated now with all these external factors swirling around.
What about the semiconductor industry? They seem particularly vulnerable given how global their supply chains are. What's their outlook?
It's interesting. You'd think they'd be freaking out, but the semiconductor sector has actually been doing pretty well lately. There's some talk that they might get some exemptions on the actual chips themselves, since they're so crucial to basically everything.
So it's like, hey, these chips are too important to mess with.
Exactly.
Yeah.
But those exemptions might not cover everything in the semiconductor world, so it's still a bit of a mixed bag. And then there's the whole push to make more chips in the U.S., but that's a long game, not a quick fix.
It sounds like all this market turmoil is making investors pretty nervous, to say the least.
Oh yeah, you're seeing some serious hand-wringing on Wall Street. I read a quote from a wealth advisor who called this one of the most frustrating markets he's ever seen. Another one straight up called the whole trade war stupid.
Ouch. That's pretty blunt.
Yeah, no kidding.
Yeah.
And when the people who manage money are that stressed, it tends to have ripple effects. It can make everyone a little more hesitant to invest or spend, which can eventually impact those big tech companies too.
Like a domino effect, huh?
Right.
So how's the rest of the world reacting to all this? What about our friends across the pond in the EU?
The EU is watching all this very closely. They're saying, hey, we're open to talking, but we're not going to just sit back and let the U.S. dictate everything.
So they're not afraid to push back.
Not at all.
Yeah.
They've even floated the idea of retaliatory tariffs, maybe targeting those big American tech companies. It's a bit of a standoff right now, but it's definitely something to watch.
And finally, how's all this playing out in terms of brand perception globally? I recall reading something about Tesla facing some backlash in China.
Yeah, there's definitely a growing sense of nationalism in China, and some folks are turning away from brands like Tesla because they're seen as, too American. It's a reminder that these trade wars can have cultural repercussions too.
It's a really complex web with all these threads connecting and intertwining. It's not just about iPhones or IPOs, it's about the whole global economic and political landscape.
Exactly. It's a great reminder that even those things that seem far away, like tariffs and trade wars, can have very real impacts on our daily lives, from the gadgets we use to the companies we invest in.
Well, this has been a truly eye-opening deep dive. Thanks for walking us through all of this. I feel like I actually understand what's going on now.
My pleasure. It's
Yeah.
always good to unpack these complex issues and see how they connect to the bigger picture.
Thanks for tuning in to Byte-Sized Tech. If you enjoyed the episode, like, comment, share, and subscribe for more fun tech discussions.
And keep those questions coming. We love hearing from you and diving into the topics that matter most to you.
And as we sign off, think about this. How do these global events, the ones that maybe seem distant or abstract, actually show up in your own life? Maybe it's the price of your next phone, the stocks you invest in, or even the brands you choose to support. It's all connected. So stay curious, stay informed, and we'll see you next time.
Until then, happy tech exploring.